This is our weekly market update where we start in the US, cross to Europe and Asia, and end in Australia and cover commodities and crypto along the way. Recently, we saw markets charging higher, and in fact many markets touched all-time highs again on the expectation of more rate cuts, but that all changed this week following another pivot from the Fed and more strong economic readings that gave pause for thought. While the US Central Bank on Wednesday did cut its benchmark overnight interest rate by 25 basis points to 4.25 to 4.5%, it projected only 2 rate reductions in 2025, citing the economy's continued resilience and still elevated inflation. And we also briefly had the risk of a US government shutdown to contend with, well, that was averted late in the day. The messy process of averting a US government shutdown offered investors a glimpse into the challenges the incoming Trump administration will face in implementing its agenda, adding an additional market concern for the coming year. At the very least, Trump is likely to lead with bold threats and leverage them to push negotiations in his favor. In fact, Republican hardliners, who normally are ardent Trump supporters, were resisting his push to raise the US debt ceiling, sticking to the belief that government spending needs to be pruned and defying his warnings of revenge. Granted, Trump isn't president yet, but he will interject ideas at the last minute, and there's no guarantee every member of the Republican Party in Congress is going to go along with his ideas, said Brian Jacobson, the chief economist at Annex Wealth. That is a formula for gridlock, uncertainty, and volatility. And we also, by the way, had the triple witching, where options contracts all expired, which added to the complexity. Also, inflation in the US, as measured by the change in the personal consumption expenditures price index, edged higher to 2.4% on a yearly basis in November from 2.3% in October, according to the US Bureau of Economic Analysis. The core PCE price index, which excludes volatile food and energy prices, rose 2.8% in the same period. That matched October's reading, but arrived below the market's expectation of 2.9%. The core PCE price index rose 0.1% on a monthly basis. So all up, although Friday saw US markets turning more positive again across the week, drops were widespread, with the MSCI Global Index down 2.53%, although still up 16.13% year to date, with the Dow Jones Industrial Average up 1.18%, but still down 2.25% for the week. That's actually its longest losing streak since October 1974. And the S&P 500 index gained 1.9% on Friday, but was down 1.99% across the week, and the Nasdaq Composite climbed 1.07%, having fallen 1.78% across the 5 days. Market volumes will decline over the holy period, and as many stocks are in overvalued territory.